People don't want to hold our treasuries anymore because not only do they have inflation and default risk, at the same time, they also have weaponization risk or sanction risk. He's saying if you try and move away from the dollar, we'll sanction you. We're going to put tariffs right across the board, and we're choosing inflation.
America is imposing tariffs, but who exactly are they protecting? The answer might shock you. Andy Schectman breaks down how these policies aren't just weakening the US dollar. They're fueling inflation, widening wealth gaps, and setting up a perfect storm for gold and silver to explode in value. Why are the biggest banks scrambling behind the scenes? And what does this mean for your financial future? Stay tuned, because this is information they don't want you to know.
Lots of time to bring the factories home, to modernize them, to equip them, to train the workers, and that's a lot easier said than done. But here again, you need to take one step at a time. I would argue that the last administration in many ways has done more to damage this country than any external foe ever could. So I think there's lots of reason to be optimistic. I admire how fast he's rolling these things out and to the degree of ambition that he's throwing into the mix to try and make this country a better country. So I don't count people out like Elon Musk, and I don't begrudge the ambition. I just think that it's a pretty heavy lift. And at the onset, I think what happens is that you'll just see these countries like India just devalue their currency, make their currency worth less in order to not feel the pain so much. And I think you'll also see situations where they'll just raise their prices at the same time to offset the
increase
the tariff. And so if they want a weak dollar and low interest rates, these countries faced with tariffs will just drop their currency proportionately to fight the weak dollar. And at the same time, they will also raise their prices on their goods to pass on the cost of the tariff to the consumer. And that's what will happen if we don't have industries that we're protecting. In essence, we're buying from these people, just paying a higher price, buying from these countries. I'd rather see us close the borders, close our military bases, bring everybody home, and worry about ourselves, be the engine of production and manufacturing, and employ as much as we are doing to protect the world, protect our own country. I don't know if that will happen, but yeah, I think his policies, while there are reasons to be very optimistic, at the same time, they ought to be very inflationary. You're talking about 8 trillion in, I think it's 8 trillion. I'm pretty sure that's what I wrote down here. 8 trillion yes, it is. 8 trillion in tax rollbacks. You're talking a few trillion in tariff. You're talking lowering of interest rates. This will make your currency weaker. This will create inflation. This will be good for, again, this is the Cantillon effect that we've talked about so much, where this stimulus is going to impact the 1%. You can see it already in Wall Street and cryptocurrencies. You can see it in assets that are going to go much higher. And that's very inflationary. This is a risk-on environment all of a sudden. And the inflationary impact ought to be a gift for the pullback we've seen in gold and silver. And I want to address that just for a moment, because look, whether or not people think the price of gold and silver has been managed by the West, it doesn't bother me if they don't. I would just simply say it's irrefutable. It has been, and it is. And there are lots of reasons why they manage it, but there have been a handful of commercial banks that have been getting absolutely murdered on COMEX and the LBMA with these very entrenched short positions. This gave them the option the opportunity with the irrational exuberance that we see surrounding the Trump victory. And I want to comment on the exuberance in a moment, but they've used that as an opportunity to push the price of gold and silver down the hill a bit, which then triggered the sell orders by all of the hedge funds and their algorithms. And the hedge funds are now shifting to risk-on assets like Bitcoin, like stocks. And it's allowed them to normalize their books and to clear off all of these shorts, or many of them that have been burying them in massive losses. And I think the irrational exuberance, it's irrational on some levels, but after what we've lived through over the last 4 years, the bizarro world what we've lived in, where everything that we've talked about, where your value is not by your merit and how hard you work and equal opportunity, but by your lifestyle and equality for all, where people question the integrity of the electoral system, the judicial system, the immigration system, the lawlessness, the wokeness, all of this stuff, the cancel culture, the censorship, it's driven everyone nuts, except the far left, who's embraced it. It's driven most people, even in the center, nuts. Really? This is not the country I grew up in. What's going on? And I think people have had enough of it. And that is part of the reason. The bottom line is, I think that factors into it too. People just have a breath of fresh air that, oh my gosh, maybe we can go back to the ideals that made this country special. And that's, I think, part of it. But at the same time, people are overlooking what I think will be a massive inflationary event of lower interest rates, a weaker dollar, which weakens the purchasing power, which brings into the Cantillon effect because the purchasing power of the dollar goes down, inflation goes up. The assets that the wealthy have purchased and that are able to purchase again through pivoting with interest rates and bringing them down, it's the same mistake we've made over and over again. Yeah. So from that standpoint, I don't see it getting better. In fact, maybe even worse. But from everything else, maybe the safety and the quality of life, at least to the way we used to be, or mirroring what we used to be, I think that is something to be very happy and optimistic about. But in terms of owning gold and silver, I think it's never been more important to own it. Don't forget about the banks whose balance sheets are already in tatters, and now rates go up again on the 10-year. They tried to lower the front end of the curve by 75 basis points, and the 10 and the 30 went up more than that over the corresponding period of time. So you can lower the federal funds rate all you want, but the bond market is saying, no, you're trapped. You're trapped because you're not going to lower rates on the back end. We're not going to accept, not only do we know you're lying about your measurements of inflation, money creation, but we're not going to wait 10 years and only take 4.5% on a treasury. You're going to have to give us more than that. And that's ultimately where we go. I wouldn't be surprised to see the 10-year yield over 5% by the time he takes office, and much higher shortly thereafter. So yeah, these are challenges that the market will face. And the old mantra, higher rates are bad for gold, that's nonsense. We watch gold go higher and higher and higher nonstop with 5% rates on 6-month treasuries. The 10-year treasury, who wants it at 5%? Who cares? It's different on the 6 months. So no, I don't think we've seen even the beginning of the end of gold's rally. I think most of the southern and eastern hemisphere are looking at this pullback as a gift. I think people should look at it that way, because ultimately this administration will do what every other one has done, and that is to choose inflation over austerity, over the difficult decisions. So yes, they may cut some stuff that probably won't be felt by average Americans, and I hope they do a lot of that. But no, inflation is here to stay. Where are all these countries? What are they doing with their excess reserves? They used to put it into U.S. treasuries, which would finance our lifestyle, keep interest rates low, strengthen our economy, strengthen the bond market. That's not happening. They're buying gold and commodities in place of it and transacting in local currencies. So you have the dual threat of not only de-dollarization, but also of lack of bond sales. And you bring up Judy Shelton there. I better put these on so I can see. Yeah, Judy Shelton is awesome because not only is she a gold bug and a gold standard advocate, but she said the most logical thing I've heard a politician say in a long time, and that is, who the hell wants to buy our duration treasuries? The only way you'll get people to really inspire any confidence, rather, in the treasuries is to back them by gold. And she said that. I've never heard a politician say anything that's heresy, for God's sakes. And yet she said, back it by gold, have it redeemable in gold, and you will get people buy the 30-year treasury. And I think it makes tremendous, perfect sense. You back the 10-year treasury with gold, or the 30-year treasury with gold, rather, you will, for the first time in a few years, have a rekindled interest in our treasury debt. The economy they are inheriting, they've been lied to. We've all been lied to. And in terms of what they're inheriting, the unemployment numbers are much higher than they say. The inflation numbers are much higher than they say. The problems are much deeper than everyone is being led to believe. At the same time, we've weaponized the treasury market. People don't want to hold our treasuries anymore because not only do they have inflation and default risk, at the same time, they also have weaponization risk or sanction risk. And Trump is not saying the right things to try to re-inspire that confidence. He's saying, if you try and move away from the dollar, we'll sanction you. We're going to put tariffs right across the board, and we're choosing inflation.
The signs are clear: rising inflation, a weakening dollar, and the elite making moves into gold and silver. Are you paying attention? Don't wait until it's too late. If you found this insight valuable, hit that like button, subscribe for more, and share your thoughts in the comments. Stay ahead of the curve, because the future of money is changing fast.